Welcome to Binance Futures Guide. Today we'll be looking at how to start trading perpetual futures contracts on a BTC USDT pair on Binance platform. To open a futures account, you need to log in to your Binance account, navigate to the top bar, and click on Futures. In Open Futures Account section, click on Open Now. Perfect. Now let's transfer some USD Tether to Futures account. Right next to Order Types, there is a Transfer button. Click on it and enter the amount you want to transfer from your Exchange wallet to Futures wallet. Once you're ready, confirm the transfer. Now you can see the available balance. Before we get into the trading part, it's very important to understand the risks and benefits that are involved with trading futures. The main difference between spot and futures market is that two counterparties will make a trade on the contract with settlement on a future date and specific price, meaning that prices on exchange are not settled instantly like in a traditional spot market. Binance uses a perpetual futures contract, which is a special type of contract that doesn't have an expiration date. So the position can be open for as long as you want, given the minimum requirements are met. By navigating to the top bar and clicking on 20x, traders can easily adjust the leverage level. Binance futures allow up to 125x margin. Be aware that maximum position size depends on the leverage level you choose. Unlike spot markets, future markets allow traders to place large orders that are not fully covered by their initial collateral, which means a 10 USDT deposit allows for up to 200 USDT in open positions when using 20x leverage. Traders should also be extremely familiar with maintenance margin levels, which value changes according to assets' market price and users' total balance of margin account. In general, liquidation occurs when the margin level of a position falls below its maintenance margin level. In such cases, all the initial margin of a position is lost. Contract overview shows that initial margin is 5%, which is a value commit when opening a position. Maintenance margin refers to the minimum balance needed to keep positions open and is 2.5%. This may sound confusing at first, so for beginners it's strongly recommended to start off on the testnet without risking their funds and get more familiar with the platform and the concept of futures trading. But now, let's continue and take a look at order types that Binance Futures is offering. With limit orders, you can place an order at a specific price. The order will be filled if the market price matches your limit price. To place a limit order, enter the price and order quantity. Confirm the order and wait until the price is reached. You can also cancel your order in the Open Orders tab. That is what we're going to do now. Shorting works the same. Enter the price, order quantity, and click on Sell/Short. Once you confirm the position, the order will be placed. With market orders, the order will be matched immediately at the best available price. Just enter the order quantity and choose whether you want to go long or short. This also makes you a market taker because you are wishing to fill your positions immediately for current listed prices in order book. Keep in mind that market takers are paying higher fees. That's how a fee schedule for Binance Futures looks. As you can see, market makers who place their orders with limit price are paying less in fees. Also, all users are getting 50% discounted fees for the first 3 months. This time, let's make a limit order and go over stop limit and take profit orders. Choose the price, order quantity, click buy/long and confirm the position. Now, let's wait a bit until the position is filled. And it's done. Now we can go to our position and see the details. Here we have a symbol, size, entry price, mark price, liquidation price, and current profit and loss. Everything looks good. However, we don't want to be liquidated. So let's set a stop limit order. That will be executed at a specified price after a given stop price has been reached. Set the price when the stop should be triggered, the price at what the position will be sold and order quantity. Click on Sell/Short because we have an open position, and in our case, we will be selling our contracts. Review the details and confirm the stop limit position. Now we can go to Open Orders and see that the new stop limit position was added. Take Profit Limit Order closes your position once it reaches a certain level of profit. In our case, if the price reaches 82.50 USDT, the contracts will be sold for 82.49 USDT. The order quantity stays the same, 0.04 BTC. Let's double check the details and confirm the position. Now in our Open Orders tab, we have two order types, one for stop loss that will be triggered if the price drops below 8,200, and a take profit order that will be executed when price reaches 82.50 USDT. You can also check order history, trade history, and transaction history that will show your commissions, fees, and transfers. Let's go back to our position and go through details once again. So we have a BTC USDT position for 0.04 BTC, our entry price, current mark price, liquidation price that lets you know when your position will be liquidated, and P&L that shows the unrealized profit and loss on this current position, meaning it's still changing in response to market moves. When you close your positions, unrealized P&L becomes realized. You can also close your position by setting a limit price and clicking on Limit, or sell for current market price by clicking on Market. Hopefully this video was helpful and you enjoyed watching it. Please remember that margin trading involves elevated risk and requires disciplined strategy. Binance. Exchange the world.